Okay, folks, welcome to the Small Chart Club. And if you're watching this on the replay, this will eventually be a private live stream. And I'm thinking about on for the new year 2024. I'm thinking about creating uh, a free membership to the Contrarian Trader, and that's what ultimately this will be. So there'll be engagement, but it'll be by basically invite only. So if you're interested, there's a link below. It's called the 30-Minute Chart Club. This is evolving. Uh, Link below. If you're watching this on the replay, if you're watching, I'm actually have this live right now to the public. This will be private in the future, in the coming weeks, going into 2024. So enter your email address so you don't miss the invite to these sessions, which will be more frequent, especially as we build up the small account. And plus, I want to be able to do more engaging commentaries with regard to our watch stocks for the new trading week, and it all comes down to what's our edge. Now, when we look for trades going into the new week, we need to be able to say, what is our edge? How are we going to profit relative to other traders? And I'll talk to you about what we did last week. Members, who I see two on already. Members, you already know what we did last week. We had a pretty good week. And that was because we anticipated what the markets did not. We anticipated a breakdown in the market. That's what we got. We knew about the yield curve. We did our homework. The yield curve steepened dramatically last week. We're going to go over that tomorrow night, Sunday Night Futures Live. If you're new to the channel, like, subscribe, hit the notification bell, get invited to tomorrow night, 6 p.m. Eastern Standard Time, when we go live and we talk about the opening price action of the futures, and we'll talk about the rest of the week. Members, if you didn't already see it, I got the week ahead commentary out early. It's published in the members area. I also sent out a link to your inbox, so you should have it. All right, let's get to it. First, say hello to people. Sean, welcome. Franklin, welcome, brother. Okay, let's get to it. I want to talk about the trade that we had on in Meta, because that's the trade that was occupying the small account club. Now, we deposited $20,000 into this account back on the 11th of August. It grew to a peak of 21,598, spot 26, and we took a loss on Meta for a couple of reasons. One, you could argue that we got too big on that trade. Two, I kept the trade on into earnings season. I'm going to illustrate for you how, even though they didn't report earnings, the problem with the stock, especially as the markets began to weaken, was that the options became more inflated, more thick and juicy, full of volatility, because everybody got afraid. Plus, they're coming out with earnings next week on the 25th. So I had to weigh out my options here, pardon the pun. And the option was that, and just to let you know, our strike price is on what you call a strangle. We sold a put, we bought a put, we sold a put, sold a call. The call side was towards the 245 strike. It was higher. We made money. We rolled that down. That was problem number one. Shouldn't have done that. Problem number two, because earnings coming up. Problem number two was that I had rolled up the puts. The problem is that we closed out the session at 308 spot 65. Our strike was either 295 or 300, I forget, to the put side. But we closed at 308 spot 65. This is a $300 stock. If this stock gaps down on Monday morning, I'm stuck in this trade unless I want to take a big fat loss into earnings. I don't want to do that. So our primary goal when we trade is not to find an edge. The primary goal is to not lose money. And the only way you can do that is risk management. So if that requires you to take a small loss, in an effort to try to avoid a bigger loss and bigger potential gamma risk, meaning an explosive move in either direction, you take your loss and you move on. You reevaluate what you do wrong, and hopefully you don't make that mistake twice. Will we trade Meta again? Sure, after earnings. Not before earnings, after earnings. So Meta, we closed out. $300 is very, very strong support, but I didn't want to take the risk. And also, just to illustrate how when you're moving into earnings, where is it? Here it is. When you're moving into earnings, here's Meta. And you could see how the implied volatility is rising. So this could still have risen, especially if the market's going to free fall early next week. The implied volatility will only get more expensive and more expensive for me to close out the trade. So first out, best out. Take a small loss to avoid a big loss. Now we're liquid. I always preach having liquidity, having capital on the sidelines, especially in this type of market. That's we're practicing what we preach here. And even in terms of our short position, we were short of the triple Qs using put options where we made money. We closed out that trade just off the lows of the session on Friday. I think that we're probably going to get a rally into this next week, because when you take a look at the S&P 500, we are at two support levels. One, right at the 200-day moving average. We closed down below it. Two, 4,200 on the S&P 500. That is a critical line in the sand. So my guess is that they gap us lower next week, and then they rally it off of that support level in front of earnings. That's my guess. I could be wrong. Maybe they're going to gap it up on Monday, which is what I hope they do. Then I could reestablish shorts at a declining moving average. So that's the game plan moving into the new trading week. That's the macro view. What's the minor view, or the macro? What is it? I forget the word. Is it minor? Macro, minor. We'll call it minor. For that, we want to take a look at. I already have names. We took a look at. Let's revisit first our names from last week. I put out last week as watch stocks for the new trading week, and there's still watch stocks. Marriott. This fired off a squeeze last week. Initially on the week, what we did, let's go to a weekly chart. We rallied on the week, hit a spaghetti bowl stack of moving averages. We were actually trading above it. And I thought I was wrong on the trade initially because it was such a strong move, but ultimately we reversed. This is going lower. So members, plan on an alert coming out this week. We will be shorting Marriott. We'll talk about the whys and whens we're going to be doing that going into the new trading week. The probability of us opening up the trade will probably be based on an intraday chart, ideally a rally up and into 21 period moving average in green. We'll be shorting on strength and or on a new weekly lower low. So Marriott looks like it's going to drop like a rock. So we like that as a short trade. We talked about this last week as a watch stock. If we execute, if I didn't watch it all that closely, I should have already been short of Marriott. I should have opened up an opening position on the rally. I kind of got intimidated by it. And I said, you know what? I'll wait until later in the week. When I check back later in the week, it was already broken down to new lower lows. So you live, you learn. The other one that we were watching was Lennar Eurova. Thank you very much. I tried to. I was born with a Brooklyn accent, and I try to fight it back as much as possible. Thank you. Although I love my Brooklyn folks. What we have on a weekly time frame is very similar to Marriott. where we rallied early on in the week. What did we do? By the end of the week, we closed at the lows of the week and down below the Bollinger Bands and the Keltner channels. So what we're expecting to see this new trading week are lower lows. Marriott, Lennar, they're going lower. What else do we want to take a look at? ADI. This one was down last week, and this is another one that we spoke about last week as a potential short. Analog Devices, weekly view. Initially, they rallied it. They closed it at the lows of the week. You could see that the squeeze is on here, and this is probably going to move a lot lower on a weekly time frame. So what's the trade here? What's the shot? Well, on ADI, I would not go shorting the shares right now. Why? It's kind of because the horses left the barn. What I'd be looking to do here is to sell a call spread, not buy a call spread, sell a call spread. What does that mean? It means to sell a deep out of the money call option, and you buy an even deeper out of the money call option to help protect your position, just in case you're wrong and the shares go flying up higher. We could do the same thing with Lennar. We could do the same thing with Marriott. But with Lennar and Marriott, especially Marriott, I think I'd rather buy a put spread. That way, it's more of a you can make more money. It's a defined risk trade, but the structure of the defined risk trade, you can make a lot more money by buying a call spread than what you can by selling a call spread. So that's the game plan with ADI, Marriott, with Lennar. The one stock I was bullish on last week did in fact close up, and that was FICO. And this looks like it wants to move up higher. Very strong chart. And you can see that your squeeze fired off 3 weeks ago, and this wants to move up higher. How did it close on the week? Down on Friday. All right, so maybe we'll get a retracement here. Maybe this will weaken up. I wouldn't buy this stock. It's off of our watch list. So how do we find these stocks? Well, with TrendSpider, and if you, as a matter of fact, I will send this out. I want to send out 2 links to you folks. And if you're watching this on the replay and it doesn't show, leave a comment. I'll send it over to you as well. So there are 2 links I want to send you. One, and I meant to begin with this. This is going to be my wallpaper when I log into Windows. Before I even log in, my login screen, this will be my login screen. Trading is merely a game of the patient taking money from the impatient. Again, trading is merely a game of the patient taking money from the impatient. Now, I have had to learn this the very hard way because I was not born with patience. And trust me, I ought to be in the AA for non-patient people. I need to go to group meetings for impatiency. It's crazy. But we try to control it. Sometimes am I impulsive? Yes, I am. And I break my own rules at times. But this is an extremely, extremely powerful trader's adage that I frankly love. And I want to look at it every day before I log into my system because it's so critical to appreciate. And the lower diagram is finding the right balance between patience and determination. I have the determination. I have that in bucket loads. Where I lack is the patience. So this is very, very appropriate for me. I have no patience, very lightweighted. I have a ton of determination. So I'll share this link out if you would like to reference it, save it, make it your desktop, your login screen, whatever. But refer back to it. Refer back to it every single day. Refer back to it before every single trade. And ask yourself, before you pull the trigger on a trade, what's my edge? Do I have an edge? And if you don't have an edge, back off. And don't get me wrong. I'm not coming on here saying that I don't make trades where I don't have an edge. But when I do, I know my probabilities of profit are much lower than were I to have displayed the patience and the determination to wait for the setup. Sean, we're human, right? So, um, you got to hold yourself accountable, which I'm sure you are. As traders, we have a tendency to we don't have a boss. You're not going to be successful as a trader if you're not your own worst critic, because you're your own boss. So it's okay, but as long as you're able, the fact that you're able to type it out speaks volumes of the ability that you have to be self-aware and to correct it, to modify the behavior, and you move forward. Simple as that. But you need to be able to, before you begin trading with real money, you need to be able to look in the mirror and say, what are my faults? Am I aware of them? And what am I doing about them to make sure that I don't forget what my faults are? So that way I increase my edge over other traders, because you're trading against algorithms. You're trading against high frequency traders. You're trading against traders with much more experience and capital than you are, and much higher technology. So the edge for the small investor, the small trader, is critical, especially when you're dealing with very, very short time frames, especially if you're a day trader, which I'm not. If you're a day trader using 1 minute, 5 minute charts, 2 minute charts, God bless you. God bless you. But you really need to have an edge and patience, because the impulse to trade it's too easy nowadays, way too easy. When I started trading, I had to call up my broker. And man, the fees on that were crazy. I digress. The other link I want to send out, because this is brought to us by TrendSpider, I want to send you out the link to this scan that I run. And it's a very simple scan. What it is a mixture of that only work with TrendSpider, 35% discount code below. Check their checkout page. They sometimes give bigger discounts than what I get, but use the link below. Help support the channel, please. So I love this scan. Basically, it's a scan that allows us to scan for the Bollinger Bands trading within the Keltner channels. So the Keltner channels basically track the rate of change on a particular stock. The Bollinger Bands are a different weight of basically the volatility of the stock. So when you have the volatility trading within the average true range of a stock, that sets up for a very powerful move. The problem is it can go in one direction or the other. Sometimes you don't know. Case in point, let's bring this up. Case in point, I ran this scan last week, and what appeared on it was Costco. I'm just going to type it in. It's on the list. There's so many stocks in here right now. I don't want to waste time. So Costco fired off an alert last week that, hey, listen, this thing is going to have a major, major move soon. But when I looked at it, and I was bearish on the market, I looked at it and I said, Jesus Christ, it looks like this thing wants to go higher. I don't want to buy it because I don't want to put longs on the table. But as it turns out, ultimately, this got limped up on very, very light volume. And as I always like to say, the test is always at the top. And what they did is, and this is why you need to understand the logic and the supply zones and resistance zones on your stocks that you're trading, or currencies, whatever. And what they did is they rallied it up to prior highs. And in fact, they even made a new intraday or intra-week higher high. And then the sellers moved in and they did it on volume. Costco is a short, a major league short. And the last I looked, the implied volatility, this may have changed. I haven't looked yet. But the implied volatility was very, very low on Costco, which would make that now it's risen now. It's risen now to 43. This was really low. You can see back here in September that it was fairly low. Now they're moving it up. So here, what we could do is we could sell premium, just not into earnings. Not into earnings. I believe they report later in the quarter. So wait for earnings, or make sure that these options expire before earnings and you go deep, deep out of the money. So that way you're not trapped in the trade. So Costco looks like it's probably going to break lower. Oh, Jesus Christ. Thank you. Thank you, Kelly. Thank you so much. I thought I shared my screen. Oh, God. Thank you, Kelly. Hi, Jody. I have these moments of humility that when I go live. The other day, I started a live stream, and for the first, I don't know, 6 to 9 minutes, I had no audio. And then I finally checked the comments. Usually I check the comments pretty early on to make sure, because there's usually Seymour Rivers comes on and somebody tells me your audio is good, because they know I'm my own worst producer. So thank you, Kelly. You're the producer of the day. Appreciate it. I don't know where Sean and Franklin were. They're probably laughing right now at me. All right, so we move on. We're self-aware. I have issues with my production abilities, and thank you for that. So Costco, implied volatility rising here, which is great for premium sellers, not premium buyers, premium sellers. We want to be the casino and not the gambler when it comes to shorting Costco. I want to sell premium, not buy it. Options are too expensive. Now, I thought I was sharing earlier. I did not. Meta and the IV ranking, and this is what we were fighting. Even though the shares were working in our favor in terms of time decay, in terms of staying within the range that we needed to stay in, the problem is that IV was rising, making the options more expensive. So I was right as I was right as could be on the trade. The problem was the options market were inflating the value of the options. I couldn't stay in the trade. The risk was way too high. So they took the weekend out of the premium on Friday. And I said, you know what? Because they paid us like $300 on Friday. That told me they took premium out and the weekend's out. And so I covered that trade. We have plenty of capital now. We're going to look to redeploy this new trading week. We have a lot of stocks that we could short now. Very, very happy to do it. The bias is to the short side. So let's continue on. And I didn't show this. Here's the account. We're still up 4.5% since August. We were up higher, about 9%, but we gave some of that back due to this particular chart right here. And we were right on it. But it's the IV increasing that got us, and earnings coming up. So you live, you learn. Okay. Let's keep this going. Let's talk about, scans that we like. All right, so here's a scan. I scanned for a bunch of stocks that are ready for a squeeze. Again, what is the squeeze? It is the Bollinger Bands trading within the Keltner channels. There are versions out there that they're charging $600 for. Don't do it. Don't pay that kind of money. I'm coming out with a new version. It's the same pro features that I'm not going to mention the name. I happen to like the one person that's selling it. It's going to be severely discounted from what is being charged. And it's got all the bells and whistles that product has, the early warning indicators of where the stock might fire off to. That's coming down the pike. I'm already using it. And as a matter of fact, here, I'll show it to you. Members, you'll be getting this for free. So if you're not currently a member, sign up. On day 14 after the free trial, you get these for free. So here it is. I call it V2. It'll be renamed. I had a V1. I had the developer modify it again. But you can see here the difference is that you don't get with the free version of this squeeze that you get on Thinkorswim or TradingView, you don't get these black dots. And these black dots provide you an opportunity, like an early warning indicator of when you should get involved with a short or a long. There are other scenarios here like orange dots, which I don't have one on here, but they're, again, early warning indicators that you get on the pro version of the paid for version of the Keltner channel Bollinger Band squeeze. Again, don't pay $600. If you don't want to be a member, it's coming out soon. It's going to be far less expensive than that. It's not that difficult of a script to write up. So I find it shocking that somebody's paying $600. I'm not going to allow that. Again, members, you get it free. But that's going to be coming out as soon as it's ready next month or so. So as soon as I work through the bells and whistles and the bugs, and it's coming out for free. All right. So the names that I like going into the new trading week, JKS, JK Solar. Now this one here, let's hide this. You can see how many names has popped up. That doesn't mean I'm not going to trade these names, but I'm going to spend more time tomorrow going through them and analyzing them. So members, more to come, additional trades coming out. But you see that JKS on a weekly time frame. Remember, we always want to look macro, not what's the, hold on one second. I'm freaking out about this. Micro. I keep wanting to say minor. Micro. I can't believe I forgot that. We don't want to look at the micro here. We want to go to the macro when we're looking at new trades for the new trading week. So what are we looking at here? We're looking at a stock that is in a clear and defined downtrend. Can't argue it, right? The problem with this stock is that even though we have rallied off the lows of the 25th, the week of the 25th of September, we are flashing a bear flag setup. This is what you call a continuation breakdown pattern. Now, what's going to happen here, as sure as God made green little apples, is that we are breaking to new lower lows. When am I wrong? If we close above the highs of last week, that's when I'm wrong. But right now, we're getting ready to put a short trade on JKS. Now, with this trade here, I would not go selling calls. Why? If this company gets bought out, they'll rip your face off. I'll sell calls, especially naked calls, on the S&P 500 because those are usually the acquirers, not the acquired. So your chances of those stocks getting bought out are a fraction of what it is for a micro cap or a mid cap. So be very, very careful with the stocks you're selecting to sell calls on, because if they get bought out, they'll rip your face off with a short squeeze. Be careful. So what I would do here, I would buy the premium and look to get short of the shares with a very, very defined risk put spread, meaning buying a deep in the money put, selling it out of the money put. It's defined risk, but you could still make a heck of a lot of money on the short. And I think that we are going measurably lower. Where are we going? All we need to do is get our crayon out. I think that we could easily head down to $20 a share. That's where we're going. And you may be saying, that's crazy. There's no way that's going to happen. Well, this is a stock that was trading back in January above $55 a share. So it could easily happen. That's where it's going. So be very, very careful with getting long of this stock. Folks, this is not an environment where you want to go buying stock. And you may be saying on Monday morning, because they're squeezing the shorts on Monday morning, that guy didn't know what he was talking about. Stock market's rallying. I'm never going to listen to him, unsubscribe, blah, blah, blah. Hey, on a short-term basis, I think that there's a very, very good chance that they have a short squeeze on Monday, Tuesday. Very good, very, very good chance. That's why I covered my short. I am still short of the SQQQ, meaning I own that. That puts us short of the Qs. My options, I book profits. We move to the sidelines. So On a rally next week, I plan on reshorting the triple Qs yet again because I think that they are going lower. More to come tomorrow night on Sunday Night Futures Live. So we're going to break down here on a weekly time frame daily chart. You can see it's already begun. Now, what I would love for them to do on Monday, Tuesday, on any rally is try to rally this back to try to recapture this support level here, because a lot of traders are out there and they're oblivious to what's going on. They think that, you know what, buy the dip, and they're conditioned for that. The problem is that they're not looking at the macro view. They don't understand that the trend is down, and they talk themselves into looking at a chart and saying, man, this stock can't go down any lower. They're probably looking at a 1 minute chart and they're saying, God damn it, this stock can't go down any lower. It's got to be a bottom. They talk themselves into it. Now, I'm not going to argue. I think the stock is going to rally, but I'm going to short that rally because that's our edge. When everybody thinks the bottom is in, yet they're not looking at the macro view, again, the weekly view, they're trading with blinders on. They're going to get killed. They're roadkill. So this is one of our stocks for the new trading week, JKS. It's great for the small account because it's only a $27 stock. We have a lot of upside potential, not a lot of downside risk. JKS, short. And I want to do it on a rally. The next one up, Spotify. Wise guy. I know you're loving it, Franklin. I know you're loving it. Watch him squirm. Watch him squirm. Where's Talon been? Okay. Spotify weekly chart. Now, what we have here on Spotify is a double top. There it is. Now, they tried to rally it through this resistance level here at 157.84. It failed. So you could see that here, let's go to the you can see on a weekly time frame. Again, we're sticking with the macro, not the micro. Okay, so here's our double top. We are flirting with these orange dots here, orange arrows. What that is, that's the 21 period exponential moving average. Traders respect that moving average like it's the Bible. Now, they're going to defend this, and they defended it last week. But what I want to know is this. I want to know when Spotify closes below that support level. I will not short this stock on Monday. Okay. And our alert is set. So it doesn't matter where you trade intra-week, intraday. What matters is where you close. And I may be bearish on Spotify. I'm not ready yet to pull the trigger. Why? I have no edge. I don't have an edge. Maybe they successfully defend the 21 period EMA. I don't know. Maybe they come out with great news next week and the Federal Reserve is going to do whatever and drive the stock market up higher. I don't know. All I will know is that I'll get the green light when we close down below the 21 period moving average. That is my signal that the bears are in control, not the bulls. And we know that we have a double top here. We also have a squeeze. See the black dot here? This is my version. You get that on the premium version of the one you get money for. I won't say the name here, but This is implying that get ready to go short of this stock. And once this goes green, guaranteed this stock is trading down below the 21 period EMA. Now, how did we close out the session on Friday? Pretty good. In fact, I think they're going to rally Spotify on Monday morning, because what you have setting up here is a squeeze. You have a blue bar that's firing off. It looks as though this is going to move up higher. So on any rally on Spotify, I may just sell deep out of the money calls and get short that way, and look to short using a purchased put spread on a break below the 21 period EMA. There's a couple of different ways to short this, and those are our two options, pardon the pun. But we'll definitely be using options on this trade. The next one up, Abbvie. Another one where I got this off of our scan here. Abbvie. And you can see that on a weekly chart. We are in a downtrend. We are consolidating. So this is not a short guaranteed next week, because for all I know, this gets resolved to the upside. You don't want to short into a support level, which we're just off of. And you also have your 89 period exponential moving average. Why an 89 period exponential moving average? It's one of the Fibonacci retracements. So you don't want to go shorting into that support level. What you want to do is short the break. And we'll keep this active for a couple of weeks. And the reason why it appeared on our list is that you could see that we were in a downtrend. They tried to rally it back, and it was rejected. So they rallied it up into this spaghetti bowl full of moving averages, which are now acting as overhead supply, declining resistance on the shares of Abbvie. Much as what we saw on Marriott, much as what we saw on Lennar. Ultimately, the resolution to that was a close at the lows of the week. Abbvie closed just off the lows of the week. The Friday price action, we were up. Maybe saying, well, outperform the S&P 500. True. The however is that they sold into that strength. So my guess is that they take this down into the new trading week. If they don't, we don't trade it. I won't even look at this unless that alert fires off. So we set the alert, we forget about it, because it's a rules-based approach. If we don't go by a rules-based approach and we say, no matter what, if I can convince myself, you know what, this looks like it wants to break down, I'm going to put the trade on. That's hoping when you should fear. Hope is not a strategy. That is not an edge. That is just stupid. What you want to do is you want to stay, again, macro. Very, very macro. Understand where you're at. You have the rising lower band of support, which not so coincidentally coincides with the 89 period exponential moving average. That's like a floor. If that fails, we're going a lot lower. So that's our edge. We know this because we did our homework. We're ready for the new trading week. Oh, thank you, Dan. Jay Trader, teach me. All right, you got it. You new here? Cool. Like, subscribe, please. And there's an email link. We're going to be doing private live streams. So please, 30-minute chart club, link below, and you get alerted when we do the private live streams. Welcome, Jay. Okay, so Abbvie, is on our watch list. And I have a bunch of other ones. Costco we did. JKS we did. Spotify we did. Abbvie we did. Who wants to see another one? We'll do one more. It's 141. Let's pull up another one. Let's do Tesla. Now, Tesla is going to break. That's the attitude. Yes, please like, subscribe, smash the like button. Okay, so Tesla weekly time frame. Let's get rid of all this. Okay. Tesla we knew was going to break because we were looking at move all. There we go. Remove all. Come on. Why don't these remove? All right. I'll try to clean this up a little bit. Okay, better. All right, so Tesla we knew was going to break. We were short of it, and I had to exit the trade before earnings because that's just the discipline. And we covered. Now we're looking to reshort Tesla. And the reason that we knew it was going to go lower was that we had broken down the week of the 18th of September. Nobody was talking about it. This is the edge. Nobody was talking about the fact that Tesla broke down. Go back on CNBC, type in Tesla, look for technical analysis on Tesla. Nobody was talking about a breakdown on Tesla, the number one highly traded stock on the S&P 500. Nobody identified or wanted to talk about the fact that it had broken down. That's good for us, bad for everybody else. So what I mentioned when we got the breakdown was that watch for a retest. Traders are going to try to recapture prior support. It's probably not going to work. Sure enough, it came out with earnings. Bam, hammered. Do I want to go shorting on Monday morning? No. I think Tesla may, in fact, rally on Monday, but I want to short the rally on Tesla. You can see when you're looking at a 30-minute chart here, a bunch of consolidation down at the, let's call it 210.50 mark. I think that we're going to break lower, probably down to 207, 208. That's probably not going to hold. But on any rally, we're going to look to load up on Tesla to the short side. We're probably going to sell. Oh, actually, this is wrong. That's JKS options. Tesla. We could buy these options because they're relatively inexpensive. So we'll probably look to put on a put spread on Tesla, but only if it rallies into strength. I'm looking for it to rally on a 15-minute chart. Ideally up to around 217 per share, and then we short it. We may, in fact, get long of Tesla early next week as a very, very short-term swing trade with tight stops, and then short it up and into around the 217 mark and enjoy the ride down, because I do think, in fact, that we are moving lower longer term on Tesla. And you can see that last week on the squeeze, it fired off to the downside. That doesn't mean we go straight down. It means that you can get a counter trend rally. Look for a bunch of spaghetti lines, the moving average lines, which are declining now, short into those resistance levels and enjoy the ride down. Nibble though. Don't get aggressively short, because if you short into, say, a 21 period exponential moving average and you go all in, you better hope that it drops right then and there. But what if it goes beyond the 21 period exponential moving average up to the 89 period exponential moving average? Well, you should be building on that position up and into that strength. So nibble, nibble, nibble. Once you begin to break, finish your shorting and enjoy the ride down. Sorry, buddy. Nothing personal, but it's going to probably rally and then it's going to roll over. I got in my short too early on Tesla Thursday. Live and learn. Of course, you live, you learn. The fact that I say this not to be, what's the word? Consolidating, consoling. Consoling is the word I'm looking for. I'm not saying it for that. I'm saying it for the fact that if you're able to say, go back to the trade, start from the beginning. Why did you enter the trade? If you could have gotten a better price, then document the reason why. And when you exited the trade, go back to the chart. What was the impulse? What was the driver that made you cover that short? And would you do anything different in hindsight? And don't just think about it. Write it down, journal it. Because when you document it, when you journal it, it provides you with two things. One, you go back, you read it, and you say, you know what, I've done this before. Now it's a trend. You have an issue there. You really got to modify that behavior. But also, when you document it, you really you sear it into your memory. It's not just a passing thought. You're going out of your way to document it. And now all of a sudden, it is seared into your brain, and you're much less likely to forget about it. Talent has been in and out lately teaching. Oh, okay. Gotcha. Thanks, Franklin. Thank you, Jody. All right, folks. Thanks for being here. If you're watching us on the replay, like, subscribe. Join us tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time. If you join any of our email lists below, you'll get notified. We'll send out an alert about a half hour prior to what's going live. And don't forget TrendSpider. I linked it below the scan that I use to come up with these charts. It's free. Take advantage of it. And there's a link below, 35% discount code for TrendSpider. Great scans, great alert system. Take advantage of it. And I will talk to you folks tomorrow night. Till then, be well. You're welcome, Sean. Take care, brother.